Months ago, I was told that I was crazy and I was a conspiracy theorist because I had said that big corporations were buying up houses throughout the United States. Well, now it looks like Twitter has gotten a hold of a lot of the information that I've been telling you about for months. And BlackRock and Blackstone have been buying up a lot of single-family properties. Today, I'm going to be showing you some of the articles that have come out, and I'm going to be showing you some things that have been happening with foreign investors outside this country and what we probably should be expecting here. And at the end of this video, I want you to tell me, do you believe that corporations are going to go ahead and buy all these houses to make more affordable housing options for Americans? Or do you believe that corporate greed is trying to squeeze out Americans from the American dream and building their own wealth? So let's just talk about this Twitter storm that started off. It was talking about BlackRock, and JD Vance started the whole thing, saying BlackRock is pursuing an investment strategy that will make it harder for young Americans to own homes. The left will ignore this because BlackRock has committed to racial audits and other diversity. Well, you know the rest. Now, this isn't a political rant by any means of the imagination. If you look at both sides of the aisle, they're both to blame because they're both in the pockets of corporations. His Twitter thread started a bunch of different articles that came out. And one of the best articles that I was able to read was one by Vox. Even though I didn't agree with everything they had to say, they did have some good points, but the headline alone made me want to cringe. And throughout the article, they continue to say, it's important to understand that institutional investors play a small role in the American housing market. While there are big firms for apartments and other multifamily units, these traditionally hasn't been the same level of investment as single-family homes. The article goes on to play both sides of the fence, stating that there are reasons to be concerned. Institutional investors might flip homes and price out some would-be home buyers. And there are worries about what might happen if institutional investors are able to gain significant control in housing markets, like raising rents above market rate. Now, the end game for all these private equity firms is basically to turn all of these houses that they purchase into rental units. But what does that do to the individual that's trying to buy a house right now? Are they able to purchase? Not too long ago, you can just search on the internet. There was a couple that was in Texas who had put in a purchase agreement for a house. And they went ahead and decided with this builder that they was going to take about 6 months for that home to build. They were told they were going to have to pay a $99,000 surcharge on top of the price they already agreed upon. Is this what's going on, Matt? Tell us.
Well, yes, it's going on because we got articles to prove it. I believe what the consumer needs to understand is that the builder contract itself isn't regulated the way the normal state contracts are, which is essentially what allows them to do this type of scary stuff, right? The builder would rather have you terminate the contract right now in some cases, especially if you've been under contract with them for months, because they can turn around now and probably sell that house for 10 to 15% more. And let's be honest, they're not really worried about the bad pub right now because people are going to be in lines out of their builder offices every Saturday and Sunday anyways. So I think it's just a matter of them not really worrying about the consumer experience too much and more worrying about their dollars, right? There is just some greed going on here too. There's everybody sees an opportunity to make money and they're going to jack up prices. And if you want to buy now, you're going to have to pay based on what they think it might be worth in a little bit.
Because it looks like the next person that's buying the house isn't necessarily another single family resident. No, it's going to be some investor with deeper pockets that's willing to pay the $99,000 plus an extra $50,000 just to secure the house. Fundrise LLC ended up buying over 124 houses from D.R. Horton for nearly double what it would have cost if this single family person had come in and purchased the home. So of course, D.R. Horton is going to take that deal, but it definitely squeezes out the average American that's just trying to buy a home for their family. So what do they plan on doing with these houses? Well, they plan on renting them out. They're going to turn as many people as possible into renters because corporations make the most money off of us. It isn't just American investors that are looking to build their real estate portfolio. Foreign investors have their eye on Austin. Why is Austin in particular catching foreign investors' eyes? The city itself has built up its major tech hub in the recent years, and Apple's newest headquarters is coming to town in 2022. With more foreign investors investing in the United States housing market, this could be signs of trouble. All we have to do is look to our Canadian neighbors to the north to see what foreign investors have done to their market and how they're trying to fight this problem today.
Vancouver's housing crisis is really the fact that they've seen so much money come in from offshore. So much money, like it has in a lot of the coastal markets around the globe, has came over from places like China, getting money out of the country and putting it into these sort of coastal real estate markets around the globe. And Vancouver's been the benefactor of that, but much to the chagrin of many Canadians who are trying to live and work there and are forced to buy and sell in a market where it's been really inflated because of this foreign money that's came in, leaving a lot of these properties to actually sit completely empty.
So these people that are buying it from foreign entities, they're buying the house just to buy a house and just leaving it empty. Is that what you're saying?
Yeah, so much so that when the money would come in from China into Vancouver, it was coming at such a rate that the pricing was going up like 25, 30% year over year. And then it was creating it super hard for normal Canadians just to go and actually buy and live in downtown Vancouver. And the properties would sit there empty. And the city or the province actually instituted what was called a foreign buyer's tax. So that said, listen, if you're going to do this, if you're going to buy a property and you're a foreign buyer, you're going to have to pay us like another 10%. And so what's happened is that the government's actually in Canada has mandated, has actually tried to make regulation and cooling of the markets. So what they've done is they've brought in things like a mortgage stress test. So that means that if you qualify, or let's say the interest rates are 2%, for example, on a 5-year mortgage term, you actually need to qualify for 4% in order to purchase that property. So you only pay the 2%, but you need to qualify for that extra 2%. And that's to try to cool the market and make sure that only well-qualified people are actually buying these properties.
And another investment company that most people don't think about is Zillow. Zillow has been part of the real estate world for quite some time. And now they have all these things where you can basically sell your home online. And then Zillow turns around, fixes the houses up, and sells them for a profit.
Zillow is flipping properties right now. And I hate that they're doing that. And I hate that because a lot of times they are making an instant offer to somebody, and they're offering them, $50,000 below what the actual market value is of the home. They buy it, maybe they do a couple renovations to it, and then they put it back up on the market. But they're literally taking equity away from homeowners with their Zillow instant offers, and that is kind of another form of flippers. And that type of flipper is not actually adding any value to the ecosystem, in my opinion. They're just taking equity and taking money away from American homeowners.
So throughout the pandemic, many homeowners were able to get a reprieve from the CARES Act and the mortgage forbearance program. But I also told you several months back that that doesn't help people that live in manufactured homes where they rent the land underneath it. I also said most likely those people will be evicted from their properties, and those types of homes will be foreclosed on because the mortgage forbearance and the CARES Act did not stop foreclosure for those specific properties. I also said investment firms are going to be going ahead and purchasing them, and I was right. I found an article from MinPost talking about non-local investors buying up all the manufactured home parks. The article states that earlier this year, in the midst of the COVID-19 pandemic, the community joined an increased American trend. Earlier this month, the community, along with similar park in Chaska, I think I'm saying that right, was bought by a Utah-based firm called Haven Park Capital Partners for a total of $71 million. And the parks will be one of the small part of financial portfolio of the Midwest manufactured home communities aimed for returning profits for financiers who have aggressively expanded over the last year. But I also want to point out in the article, the largest institutional landlords, companies like Innovation Homes, which was started by Blackstone private equity hedge fund. Associates at the Urban Institute are currently studying the phenomenon of investment firms buying homes, trying to calculate and scale the scope of the problem within the Twin Cities. And we're going to be seeing more of that throughout the country. So if you happen to see an article in your local area about this, please send it to me. Remember the article I mentioned at the top of the video? The last paragraph is what really burned me up. The role of the institutional investors is still being studied, but the popularity of the narrative strikes at something dangerous. People want a convenient boogeyman, and when they get it, they often ignore the structural problems that are harder to combat. The housing undersupply is the result of decades of local opposing new building. It's not something that can be blamed on Wall Street greed or nefarious tinkering with the private equity firms. And that's a much harder truth to stomach. The end of that article burns me up, because all I want is for everybody to be able to find an affordable housing option. And that right there, private equity firms, is undeniably trying to take away the American dream.
And I'll say that I do think that home ownership plays a vital role in people being able to retire one day. Most people, they have to pay off their homes before they can retire. If you just rent your entire life, you're always going to have that rent payment the entire life. And it could be the difference between a lot of these people ever retiring or working until the day they die. So that really is, it's crucial to the American dream to make home ownership affordable and easy for the average person.
So what do you think? Do you think that private equity firms are going to try to save America's home prices and they will create more affordable housing rents for people? Or do you think these private equity firms are going to continue to make housing prices go up? Let me know in the comments section. If you want to know more about the housing crisis and videos I've done in the past, you can watch this video right here. My name is Kristina Smallhorn, your real estate whisperer, and I tell you all this because good real estate information matters.